When it comes to the world of finance, there are not many stocks that have been able to captivate the imagination and attention of both seasoned investors and beginners to the industry quite like Tesla has. The innovator of electric vehicles, EVs, which is well known for its groundbreaking technology and dynamic leadership, has continuously been the focus of curiosity and anticipation. There are many exciting topics, but one of the most intriguing is whether or not the stock price of Tesla can reach the astronomical amount of $8,000 per share by the year 2030. In this video, we will delve into this subject and investigate three separate cases: a pessimistic view, a decent prediction, and an extremely optimistic scenario. The forecast for the year 2027. Before we begin our journey to the year 2030, it is important to review an interesting prediction that was made regarding the price of Tesla's stock in 2027. This forecast, which was provided by a well-known financial organization, included a number of potential outcomes, with the year 2027 representing the most optimistic goal price of $2,500 per share. This prediction will serve as an important point of reference as we extend our investigation into the year 2030. Tesla's future depends on these catalysts. To evaluate the likelihood of Tesla reaching $8,000 per share by the year 2030, we must first identify the various catalysts that could drive the company's growth over the course of the following decade. Only then can we determine whether or not this is a realistic goal. These catalysts consist of the following: completely self-driving vehicles and a robocab fleet. The successful development and deployment of autonomous driving technologies, in conjunction with the growth of a robust robo-taxi fleet, have the potential to completely transform Tesla's revenue streams. Nevertheless, it is of the utmost importance to recognize the regulatory obstacles and technical complications that may influence the schedule. Expansion of Tesla's supercharging network. Not only does increasing the number of manufacturers that use Tesla's supercharging network create income, but it also helps to improve the ecosystem for electric vehicles, which may have an indirect positive impact on Tesla's stock. FSD licensing. Tesla's full self-driving technology has the potential to be licensed to other automakers, which would provide an additional source of cash for Tesla. Peer-to-peer ride-sharing. Tesla owners may have the opportunity to lease their vehicles to Tesla's robotaxi fleet, which would increase the value of their assets. Release of Tesla's Cybertruck. Tesla's much-anticipated Cybertruck, intended for both utility and performance, might considerably contribute to the growth of Tesla's stock if it meets the expectations of the market. The introduction of more affordable electric vehicle models, such as a hatchback priced at $25,000, might democratize the use of electric vehicles and broaden Tesla's customer base. Vertical integration in the manufacturing of lithium. Vertical integration in the manufacturing of lithium could lessen a company's dependency on third-party suppliers and increase profit margins. Expansion of the Gigafactory. Expanding manufacturing capabilities and continued cost efficiency efforts are crucial for sustained growth over the long term. Expansion of the energy sector. The energy business of Tesla, which includes solar roofs, Powerwall, Powerpack, and Megapack, possesses a significant amount of expansion potential. The bear scenario, $2,500 by the year 2030. In the most pessimistic version of our forecast, we see Tesla's stock hitting $2,500 per share by the year 2030. This prediction takes into account the risk of delays in attaining milestones, production scaling at 50% of projections, a 25% profit per vehicle, and modest expansion in Tesla's energy sector and supercharging network respectively. The reasonable projection is $8,000 by the year 2030. Tesla will have reached $8,000 per share by the year 2030. This scenario considers the possibility that Tesla may meet its objective of selling 20 million automobiles a few years later than it had previously intended, but the company will still come close to achieving its goal. The enhancement of profit margins, the successful introduction of Cybertruck, and the growth of Tesla's energy industry are all essential components of this prognosis. An extremely optimistic case: $22,000 by the year 2030. For Tesla's valuation to increase to the point where each share is worth $8,000 by 2030, it would require the company to achieve unprecedented dominance in the global electric vehicle and clean energy industries over the next 8 years. To reach such a massive price per share, Tesla would need to capture at least 30% of new car sales worldwide by 2030, while simultaneously leading the electric energy storage market. To dominate EV sales on this scale, Tesla's manufacturing output would need to expand exponentially by 10 to 15 million vehicles annually. This means massively scaling up production across multiple new gigafactories and pioneering innovative techniques to build EVs more efficiently than ever before. Tesla would also have to fend off increasing competition from legacy automakers like Volkswagen and Toyota, who are investing hundreds of billions into their own EV transitions. Maintaining industry high margins of 20% or more as volumes grow to millions of cars per year would be vitally important. In addition to cementing its position as the world's largest automaker, Tesla would also have to leverage its battery advantage to control a huge portion of the rapidly expanding utility-scale energy storage market. Utility and commercial customers around the globe would have to overwhelmingly choose Tesla's Megapack solutions for stabilizing power grids with battery technology. Robust margins from this clean energy business could help supplement automotive profits. On the technology front, Tesla would need to solidify its reputation for groundbreaking innovation. Continuing to reduce battery costs while improving vehicle range and performance over time would help lock in consumer demand, especially against increasingly competitive offerings expected from other carmakers. Achieving full self-driving capability ahead of rivals through a proprietary software platform could unlock substantial new licensing revenue streams as well. For its shares to appreciate so dramatically, Tesla must also benefit from generally thriving economic and stock market conditions worldwide. Sustained high consumer demand and spending on EVs is necessary to fuel growth plans. The company must also consistently beat Wall Street expectations on production volumes, deliveries, and new technology rollouts quarter after quarter to sustain today's record valuations. Any meaningful misses could severely hamper share price appreciation. Achieving such dominance and exponential growth would undoubtedly be an incredible accomplishment, though challenging given the intensifying competition ahead. Investing in Tesla for your retirement planning. Now that we have covered the theoretical ramifications of these predictions, let us move on to the practical ones. In each of these hypothetical futures, how many shares of Tesla would be required for a person to be able to retire comfortably by the year 2030? To begin, let us make the assumption that a comfortable lifestyle in the UK requires an individual to have a monthly income of £2,000. Taking into account an annual inflation rate of 5%, this will be equivalent to a monthly payment of £3,400 in the year 2030 or a yearly salary of $40,800. We are able to determine the initial investment necessary for retirement in each of these scenarios on the premise that Tesla stock will appreciate in value by 15% on an annual average basis after the year 2030. Using the reasonable prediction of $8,000 per share, an individual would need to begin their retirement in 2030 with a savings account balance of £320,000 in order to maintain their standard of living for the full 20 years. The task of forecasting the price of Tesla stock in the year 2030 remains difficult and riddled with uncertainties. Nevertheless, thinking about a variety of possibilities enables us to investigate the range of possible outcomes. The direction that Tesla's future takes will be determined by a number of things, including the expansion of its electric vehicle business, the development of new technologies for autonomous driving, and the company's entry into other areas, such as the energy sector and the robotics industry. There is no way to know for certain whether or not Tesla will reach $8,000 per share by the year 2030. Nonetheless, the path that the company will take to get there promises to be an exciting one for both Tesla aficionados and investors. In order to make educated choices regarding your financial future, it is essential to carry out exhaustive research, diversify your portfolio, and seek the advice of financial professionals. This is true regardless of the type of investment you choose to make. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.